going to stand for the pledge to the U.S. and the Texas flag, please. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. Honor the Texas flag. I pledge allegiance to Texas, one state under God, one indivisible. Thank you all very much. Good morning. Today is a budget workshop. We have it posted for a budget workshop starting at 8:30. I'd like to certify that all members of the court are present, that we have a quorum. And ladies and gentlemen, what I'd like to do, with your permission, is first I want to thank Dale and his fine staff. I want to thank Kristen and Teresa for the hours that has been spent on getting us to this point for our discussion. Commissioners, I know you know this, but they do an awful lot of work for us, and I want to publicly thank them. And as we go through, you'll be able to see the quality of their work. And Dale has turned several people in the auditor's office into this budget group, so thank you. What I'd like to do is I'd like to ask us to let Dale and Kristen present the budget as it has been done in the book. And if you will, you can do whatever you want, but if you will hold your questions, make notes, please, till the end of the budget presentation. Then we'll take a little break, and then when we come back, I'm going to ask each of you to do as much or to spend as much time as you want to discussing your perception of the budget, things you might like to change or not change, and we'll take all the time in the world that each of you wants to do that. We'll not vote today on anything, because whenever we get through today, if there are things you would like to suggest that might change where the presentation is, we're going to ask Dale and Kristen to work on that. And when we come back tomorrow at 8:30, John, 8:30 in the morning, we'll go through your recommended changes as slowly as you want, analyze those, and remember it takes 3 votes from anybody on the court to make a positive impact on the budget. We won't vote on the budget, but we might be able tomorrow to look at some possible changes that you might have if you can get support to do that. So if that's okay with you all, I'd like to ask the people who may have spent hours preparing where we are to take this, and then we'll listen for a while, take a little break, and then we'll start in with all of your comments. I promise you we'll be as long as you want to be, and then we'll leave some things for them to do for us tomorrow. That's okay.
Just a procedural question, and I'll let him do the presentation. So these are both workshops today? And
both workshops.
And so I guess my question is, if we plug through this today and decide we want to do this today, do we come back again tomorrow for more presentation?
No. Tomorrow will be, my concept would be, I know every one of you has looked at this closely, and there are things you probably would like to suggest that we might want to consider changing. And thank you. And in order for them to respond to that, we're going to be here tomorrow morning, and it will give us a lot more time to really delve into those. If you feel like we can do them today, fine, but I think what you're going to find as we get closer to 12, it's going to be, let's just see where we go.
Well, no, I'm trying to figure, because we've got like 4 budget workshops. I'm trying to figure out.
We can get through in 2 days with the nuts and bolts. I think we ought to do that.
Okay. All right.
Okay.
Let's just see how it goes.
Okay. Let's see how we do. I don't want to cut anybody off, but I want to have good discussion. But at the same time, we're going to move on. All right, Dale, thank you.
This is the book together, the first page of your table of contents showing you each of the tabs we have, the information have. I'll be turning it over to Christian for tab 1, talking about the budget calendar. Then her and I will alternate between certain areas of discussion of where we believe our specialty is on the items. So you'll see the table of contents lists all of our information that we have provided for you in each tab. And as we go through this, we can go through each of the tabs separately, and as questions come up, then I can tell you where it is located. So, Christian, I'll let you go ahead with the calendar.
Okay, good morning. The only things I want to really touch base on the calendar today are, obviously today and tomorrow we are in budget workshops. On Wednesday, we do have a regular Commissioners Court meeting, and the only budget-related item on that court date will be the submission of the effective and rollback tax rates that the auditor's office will present to the court. There's no vote that needs to take place. He's just simply submitting that the calculations have been prepared and submitting them to the court.
You just need to show that you received the information.
Okay, no vote.
No vote. The only reason why I require that is because hospital districts were required to publish the information in the paper, and we have to have you all receive it so we can have the information published in the Thursday paper.
Okay, good. Very good.
And then if the court so chooses, we can have those August 13th and 14th budget workshops. They were put in there as tentative dates in case we do need to expand into those. And then August 15th is an important date. That will be a Commissioners Court meeting. However, there's only going to be one item on that meeting, and that is to vote on the proposed tax rate at that time. So that will take place on August 15th. And then, depending on what the court decides at that time, then that will trigger additional dates after that, whether we have to have public hearings. So the next really important date is August 15th to keep in mind.
Okay. Thank you. Okay.
Tab 2 is the information we're going to talk about where we estimate the values for revenue and expenses. Tab 2 is for the general fund. At the bottom of the page, you'll see where we have 02-1, 02 is the tab, and 1 is the page number where we're referencing. The first one, as we realize, is our taxes. That's our largest source of income. Roughly about 68 to 69% of our revenue comes from our property tax. We're estimating $70.6 million worth of estimated collections. That's right at about 99.5% of budget. As you see, we're slightly under budget by about $70,000. So that's still showing, pardon me, very, very, very good collections. Sometimes we're over, but this is about where we should be. Our other taxes represent bingo tax, our occupation and coin machines throughout the county, and vehicle inventory taxes. That's what VIT stands for. And you'll see our bingo tax is slightly down. The state changed how they allocate and how they divide the bingo tax. It used to be on a quarterly basis. Now it's on an annually basis, and they decide how they are now calculating the collections for bingo tax. They said that most likely our values will be going down over the years, hopefully not too far, so we're not doing anything for that particular issue. So we're keeping it at a $309,000 budget, but we're down about $100,000 from what we have, and hopefully that number increases, but what we had for estimations is the best we can do. Fees of office is other fees that we generate, county clerk fees, district clerk fees, JP fees, papers, serving of papers for the sheriff's office, constable's office, and other miscellaneous fees that we show collections are the next group. The one for the county clerk collection division is down on fees. And there's several reasons why that might be. We know that the district attorney has initiated a more advanced pretrial diversion. The pretrial diversion means they pay a certain amount to the district attorney, and then after they meet certain requirements, the case is dismissed, which means it does not go to the courts for adjudication, which means there are no fees and fines assessed or collected. So that's kind of why some of the fees are down for the county clerk collection division, because the DAs is mostly on the county court law and the district court levels of collections. The JPs are doing very well. Most of them are above where we budget. That's why we're showing about a $77,000 total increase in budget for next year on what we expect the revenue coming in. So they're doing promising, as well as the sheriff and the constable on there. Mostly there's serving papers or serving writs that they provide for us. But as you see, our fees of office is right about $8,000 over budget, which is very, very promising. On page 2 is where it gets a little challenging on our fines and fees. Again, a lot of the reason why our fines are down is what I mentioned before, the DA's pretrial diversion. If we don't have a fine, then our fines collections for the county clerk collections division goes down. And that's where you'll see we're dropping that value. It's been going down the last 3 years, and that's kind of where we expect. The JPs are pretty much holding level, as well as a couple of them are going up. JP 5-1 is showing a larger increase, so we're increasing that budget, as well as JP 3. License and permits. License and permits are what we have for when we have a license for any items for the county, as well as issuing permits for example, for like on the road fund, they issue permits for crossing streets. We have other permits we have collected. We're showing estimation of $132,508, or $12,508 above what we estimated on budget, which is very promising. Motor vehicle services, this is where the sales tax of the vehicles come in. Every year, we get about $3.6 to $3.7 million on the sale of vehicles, which is very promising. There's other small little issuances in motor vehicle sales, but the largest one is the sales tax. And that was moved to the general fund 5 or 6 years ago when the state told us that we had to have our sales tax in this particular fund. We're $31,000 over budget, which is very promising, and we expect that to continue throughout the years. The next section is intergovernmental revenue. Most of that is for your reimbursement for salaries on all the county court laws. We get $84,000 per judge from the state. We get about $70,000 to $80,000 for the district attorney, and about $100,000 to $200,000 for the county attorney based on reimbursements, and these are your state longevity reimbursements. The next items you'll see: indigent defense, state alcohol, beverage, and state jury. State jury is going down, and some might say, well, why is that going down? Well, our expenses on the other side is also going down because of the online enrollment, which is very promising. And you'll see later on when we talk about the expense, we've seen about a $300,000 to $400,000 decrease in expense in juries, which is very promising. So if that goes down, of course, our reimbursements from the state will be going down. The rest of the numbers are where they need to be. So we're a little bit below on collections, and there's this is also where we have state and federal grants, and some of the times they'll be a little less because of not receiving grants. So the negative 32 is not really alarming for us in that particular case. Housing of inmates and juveniles. Last year we did not include anything for the housing of federal inmates in our county jail, and we're not doing anything this year as well, so there's no estimated actual or budget. The juvenile courts, a year ago, they changed their boot camp to a pretrial post-adjudication, and they worked with other counties around the area, and they were estimating about $300,000 worth of collections. We're at 487, and that may be higher than that. And talking with the juvenile department, they expect that to continue in the near future. So that's why you'll see we raised that budget, and they're $187,000 over what we estimated the budget would be. So that's very, very promising to see. And hopefully we can get all the situation resolved with our sheriff at some point in time and start receiving federal inmates, but right now that's not the case. On page 3 is where you talk about charges of services. That's different charges we have throughout the county. Again, for the sheriff and the other items, that's all consolidated together. We estimate about $525,000, which is about $25,000 over budget, which is very well in there. We don't see any need to adjust that, and we're right about where we should be on collections. The promising that we've seen is on interest and investments. 2 or 3 years ago, the Commissioners Court allowed the investment committee and the investment officers in my office in the County Clerk's Treasury Division to invest in municipal bonds. Municipal bonds have a higher rate of interest as well as some other interests we have, and those are showing very, very promising results on our interest. We estimated budget of $200,000. Right now we're estimating collection of $635,000. That might be low once the full entire numbers come in. So we're going to increase that budget to make it more realistic. And just so you know, we just made an investment through the City of New York at a 2.9% rate of return for 2 years. So we're very promising, and our current bank depository is a little over 1%, as well as our MBIA, which we talked about at one point in time earlier in court. That MBIA is at 1.6. So we're doing very well on our investments, and we hope that we probably continue that should continue. The biggest line on rental and commission. We have an agreement with a company that handles our phone services through the jail. Anytime a person in the jail calls out to their family or friends, they're charged a charge for that particular services, and we're guaranteed $695,000 every year, roughly. If the number of calls go over a certain level, they then have to require them to give us more. This last year, they gave us another $55,000 above the $695,000. So the largest part of that $796,000 is the phone services contract we have with the company we have for the jail phone services. Our refunds, they're really not anything outstanding except the one that says other refunds. You'll see that as a 1.4. Last year, we bought equipment for the election equipment out of the general fund in last year's budget, just because of where it hindered. So this year, we reimbursed the general fund for its particular cost of the election equipment, which was around 1.1 to 1.2 million. So that's why that's a very large number. So total refunds and reimbursements is 1.5 or 1.4 million over budget. Our other income is just general income with the sales of materials, copies, fees, as well as miscellaneous revenue. So for 17-18, we're estimating collecting $89,574,023, which is $1,800,000 over budget, which is right about 101% of revenue. Our transfers come from our special revenue for our jail contract. We have our court reporter has a fee that we reimburse our general fund for the cost of that, and other miscellaneous small little fees in the special revenue. So we're estimating collecting exactly close to what was budgeted with a few small items. So total revenue is $90,909,299. Last year's budget from the CAFR was $16,510,888 for available resources for expenses of $107,420,187. And that's the revenue collections for what we're estimating for fiscal year 17-18. Any questions or anything you want to ask on those?
You said $90,000. Where is that $90,000? I don't see that.
$90,000. The miscellaneous was $92,700. We're at $90,909,299 total revenue.
Oh, you're in the bottom on the total?
Yeah. With a $16 million 510 fund balance of $107,420,187 in available resources before expenses.
It went from 16 to 18.
So with that, we'll go to tab 3, which is our expense reports. I want to hit a few of the items that I believe that are need to be done, because most of them, as you'll see, are very close to being right where they should be, or are slightly under budget, which is what we kind of hopefully can expect. The one is the general administration. You'll see it appears that from the prior year to the current year is a large drop, and that's where the $1.2 million was at. So theoretically, we did only spend $17,679,000 in general government, which includes all of our commissioners, as well as the judge, myself, office, county clerk, district clerk, and other forms of general government. So for the general government, we're $2,140,749 under budget. And a lot of that is because our general administration already has a $2.2 million contingency built in. $1 million is for one of the top 10 taxpayer appraisal value dispute, and $1.2 million general appropriations that we have for contingency. So that's the $2 million right about where we've used some of the contingency, but we still have most of it there. And we've already allocated some of our costs for a dispute we have coming up that we were able to expense. The building of the facilities, starting on page 1, going through page 2. We'll see where our total billings, we're estimating $7,545,000, and they're under budget by $1,786,000, which is very good. The largest is our building superintendent, where we had a $750,000 contingency there because of when we had a dispute last year with the city on the natural gas coming into the building was at a higher rate, and we wanted to make sure that those weren't to be continued, so we applied a $750,000 contingency there to make sure that they had the funds necessary. That's why we see a little bit of a larger on a plus sign. Capital outlay, we pretty much have expended the same values, close to the same values every year, about $700,000 to $715,000 to $720,000 every year. So that's what we're estimating that. So we're still about $340,000 to $350,000 under budget. However, working with Christian and our staff, we know we have additional costs that we're going to expense that probably will be higher once we get the actual numbers in. Our administration of government is the large area. We budgeted $22,909,000. We're estimating spending $21,110,924, which is very promising that we're almost $1.7 million under budget. And that's what you'll see towards the middle on page 3. You'll see 3510 jury administration. That's where our jury expense is, and you'll see the $319,000 under budget, and the largest is because of the online jury that we have. The rest are pretty much where they should be. The largest one under is County Court Law 5. We hope to be addressing that later on when we have some requests coming in, and we'll talk about that later on some requests. But that's always a challenge on County Court Law 5. We're trying to work with Judge McCoy on those items to try to get him some more value. The largest function of government is law enforcement. That includes the sheriff, our district attorney, as well as each of our constables. We budgeted $31,024,000. We're spending estimated at $30,103,000. So we're still under budget by almost $1 million, $921,000, which is promising. If you know the amount of overages we have on the overtime for the jail, they're all set by the vacancies that he has. So we're really not alarmed on those particular situations. Social services is the next. There's none that really stand out that is really driving any negative costs. Most of them are below budget, which is promising. So the total social services is $329,000 under budget. Our health and services, again, are about where we expected them to be, and we expect that those numbers should hold out throughout the year, as well as our agricultural. So including all functions of government before transfers, we're estimating that we're going to spend $81,380,571, or right now $7.4 million less than what we budgeted last year, which is very promising, which shows that with y'all's assistance and the assistance of all departments, that we're managing the expenses and trying to keep our costs low. The next level we talk about is our transfers. So these are budget transfers for operating purposes for several of our operating funds. Road and Bridge, Special Revenue, Stadium Fairgrounds, Airport, Inland and Coastal Parks, as well as some capital projects and some main grants. One thing you should see is on the one for road fund. Our budget was $2.6 million. We've only transferred $1,903,799. We were able to do that because of a transfer we were able to do from Road District 4 to offset that, so the general fund was not required to transfer those funds. Also, on about midway down to Coastal Parks, again, Road District 4 transferred the funds for the county so that we were not required to transfer the funds from the general fund, which gives us some relief from the general fund. So total appropriations and transfers was $88,465,578, which gives us, if everything holds correct, our fund balance at the end of this year will be $18,954,609, giving us the total resources of $107,420,187. Again, the fund balance we expect to begin this year with is $18,954,609.
Okay, now we'll move on to tab 4. Tab 4 is a summary of the information that's provided by the appraisal district. Every year, the appraisal district is required to provide the county with certified values on or about July 25th. And this sheet right here is a summary of those certified values. And as you can see, it's broken into land improvements and non-real property to give a total market value. And this is compared from 2017 to 2018 certified numbers. And you will see that for total land market value, there was an increase of $233,754,168, or a 2.6% increase. For total improvements, there was an $816,991,023 increase, or 3.8%. So the total market value did increase by $2,622,244,334, or a 6.9% increase. Then after you adjust for the homestead cap and the total productivity loss, you get down to a total assessed value. And the total assessed value did show an increase of $2,765,604,896, or 7.6%. From the total assessed, then we take a look at the Nueces County exemptions that were applied, such as homestead, over 65, disabled. So that, after you take the total assessed less the exemptions, you get down to a net taxable value. And the net taxable value is showing an overall increase of $1,692,166,354, or 6.1% increase. Then after you adjust for the freeze taxable, you get down to just over $1.6 billion, or a 6.15% increase. Now, Dale will show you later, we take these numbers, and then there are a couple other adjustments that are required to get to the values that we have to calculate for the truth in taxation worksheets, and Dale will get to that later. If you want to flip over the page, and we can take a look at the total residential versus total commercial and industrial. And you will see that total residential overall, there was a 1.55% increase, and in total commercial and industrial, there was a 10.9% increase. So the larger increase was in the commercial portion. If you look at your next page in your book, it is a certification of the 2018 appraisal roll, and this is for just Nueces County. We're not including the Road and Bridge or Hospital District pages in here at this time, but they're relatively similar. So you will notice that the value of all taxable property not under protest for 2018 is $29,432,163,108. And the estimated taxable value of property under protest is $93,345,672. We were informed that the under protest number is a little bit lower than it has been in the past, and the appraisal district indicated that the legislator allowed them an additional 15 extra days to go through the ARB process, and so that allowed them to clear more out of there than normal. And that $93 million is based off of an 85% percentage of the total. And the pages after this are the actual pages that were received from the appraisal district with the certified values. And so everything that we've just gone over on the summarized pages came from these certified sheets.
As Christian was saying, on page 6, you'll see the total under protest was $109,016,646. The number on the front page was 85% of what they expect. The only reason they do that is because they believe on history that they can probably win 85 to 90% of what the ARB protest values are, so they usually just give us 85%. But once the final certified roll is provided to our tax assessor collector, those will all be resolved, and my staff and I will provide you how much difference that would be once the total certified rate is going to be done. As Christian said, we'll be talking about receiving the effective rate and the rollback rates on Wednesday. We're going to kind of go over those right now for value. On page 5.1, you'll see where we talk about the comparison of our net taxable value. Our net taxable value will only concern itself with the top numbers, which is the general fund, which includes our debt service. Right now, as Christian was saying, the numbers comes from the certified rolls that we're talking about. Our taxable value, 418 is $29,432,163,108, or 1.6 billion above last year's rate, or 6.10%, as she had mentioned. The information that does not come from the appraisal district, which is the rolling railroad stock, which we have 2 railroad companies in the Nueces County, and the comptroller of the state provides us with those particular information. Right now, they provided us $11,730,112 for 2018, or right about $660,000 increase in value, or 5.92. Value under protest is what Christian was talking about because they were given more time. Last year, we had $523 million worth of value under protest. Right now, we only have $93 million or $430 million difference. So that's why we want to make sure those numbers were accurate in what we had. And that's definitely 82% decline in value, just so you might know. In our ceilings, as we excuse me, as we talked about earlier, is $1.655 billion or $79 million above the prior year, or 5.03. So for net taxable value, before we begin the other calculation to get our effective rate, is $27,881,351,258, an increase of $1.18 billion, or as we saw from our values, 4.43 increase in taxable value. Pardon me. Now we're going to go and show you our calculations of our rates, and then we'll show you how we basically come up with those calculations on page 2. Just for clarification, we show you what our last year adopted rates were. For the general fund, debt service fund, and road fund, our total tax rate was 0.307991. With the calculations that we have coming up for our effective rate is 0.295742. And our maximum rollback rate right now, we're still computing that at 8% until we're told otherwise from the state, because they've been throwing those numbers around between 6 to 3 or 4%, but we're still doing the 8% as truth and taxation allows. So our maximum rollback rate for the county, for the general fund, debt service, and road fund is 0.324140, and make sure you note that the debt service at the maximum rate is the maximum allowed that we need to pay for 100% of our debt service requirement. Just for clarification, we also record the calculation for our hospital district. Last year's adopted rate was 1.21297. Our current calculated effective rate is 0.116058. The maximum rollback rate is 0.125342. Now I'll kind of go show you through a few of the calculations that we do for the effective rate. I won't go through all of them, but I will go through the general fund, which is on page 3. As we show, we take the taxable value from the appraisal district of $29,432,000,000. Take the value of the property under protest of $93,116,000. Add in the railroad stock of $11,730,000 and take out the freeze of $1,655,000. As we stated before, our net taxable value is $27,881,000,000. Now we have two tax increment finance zones, those being the downtown zone and the Pottery Island zone. The value of the capital appraised value in those zones is $460 million, $889,219. So we take that away from the taxable value to be able to come up with a total taxable value of $27,420,000,000. The effective rate does not calculate the new property in the area, so we have to subtract out new property of $401 million for adjustable taxable value of $27,019,417,359. To bring up to the levy of $78,900,585, we need a general fund effective tax rate of 0.292014, and that number does include the debt service in it. And again, our maximum rollback rate is 0.320114. That's just for the general fund and debt service. That's how we come up with the calculation for those, and we do the same thing for the road fund and hospital district, which is on page 4 and 5. We've asked you to do a few scenarios of possibility of what the effective rate, the rollback rates and stuff will generate to you in tax. On page 6, we do what the additional funds would bring if we adopted the effective tax rate, which means additional no new tax. The only increase would be on the adjustments of small little values of property as well as the new property. If we adopted the effective tax rate, we would bring in a $411,525 additional revenue into the county this year. Now, we were given some tax area, but we want to give you everything we possibly can. So on page 7, if the county chose to do the maximum rollback rate, which is the highest rate we can go before there's a chance that the citizens of Nueces County can file an election for rollback hearings, is 0.324140. The general fund would be .269456, which will bring in $5,698,121 above last year's budget for revenue. Just so we have a few scenarios we can talk about. Again, going back to the effective rate, on page 8, we went 1 cent above the effective rate. And just for clarification, our current rate is 1.03 cent above the effective rate. We'll talk about that in a few minutes. But if we go 1 cent above the effective rate, that brings in $3,060,252, showing on page 8. On page 9 is 1.5 cent above the effective rate. That would bring us $4,384,617. On page 10 is 1 3/4 cent, or 1.75 cent above the effective rate, would bring in $5,046,799, and 1.75 is very close to the maximum rollback rate. Again, if we use our current rate, as I said, our current rate on page 11 is 1.03 cent above the effective rate. That brings you in at $3,144,747. The next few is what if we chose to use the current rate for the debt service, we would bring in $540,435 for the debt service fund on page 12. Farm to market on page 13, if we use the current rate, we would bring in $52,497. And just for clarifications, for the hospital district, we're always estimating and we're proposing the effective rate. If we bring that to the effective rate for the hospital district, they will bring in $113,027. Those are a few of the scenarios we put together. Once we start the discussion, we can definitely come up with more should you want, but that's what we're talking about for the calculation of our effective rate and rollback rate and several scenarios for taxes.
Okay, if you'll flip over to tab 6, what this is, it's a summary of all of the department requests, and then what our recommendation is for an increase or decrease to each of those departments, general fund departments. I'll just be hitting the larger ones. If you have an individual question on a department, we can certainly go back and address those, but I'm just going to hit the large ones at this time. If we start with Department 1170, County Clerk Treasury, you'll notice a $21,000 recommended increase. And what this is from a courier service that's now required under the depository contract. This came out of Department 1285 this year because it was not budgeted in 1170, and so we're proposing to actually increase 1170's budget to cover this. Previously, this was not a separate charge, and under the new depository contract, now this is required. If you go down to 1190 election expense, the $17,000 increase, the majority of that has to do with telephone utilities for cell and Wi-Fi service directly connected to the election that they need to have. Then Department 1200, the tax assessor collector, you'll notice a large decrease of $71,000. And what this is every other year, they're required to have large mailings for voter registration. And for fiscal year 18-19, that's not one of the years that it's required. And so we are recommending that be taken out, and then next year it would be put in. That's kind of typically how it's done. It's put in one year, taken out the next. If you go down to Department 1250, there's a $40,800 increase on that, and the auditor's office is asking for some computer software service and maintenance that's needed to cover for QuickBooks, ExecuTime, BenTech, Superion Financials, and this does cover multiple departments. These software and maintenance is not just for the auditor's office. Department 1285, General Administration, there's a $75,000 increase, and this is made up of two components. The first one is $45,000 that's needed to cover the county's proportional share of the appraisal district's budget, and which that is based on property taxes, and this is something required that by statute. Probably really should have gone up this year, so I'm really covering for this year plus an anticipated increase, about 3% anticipated increase for this upcoming year. So that covers the $45,000. The additional $30,000 is Nueces County share for hiring a consultant to assist with the implementation to replace an 800 megahertz radio infrastructure. This is something that the city maintains, and the county does have 600 radios associated with this. And so when the city goes out to ask that that the implementation of this radio infrastructure is passed, then the county will be required to pay for its share of that. And this first part is just to hire the consultant to help with the implementation. And that represents the county's 17% share, or the 600 radios. If you go down to the next page, the two we'll look at is Department 1570 for building superintendent. You will notice that there was a $1.2 million requested increase, and we're only recommending $29,400. And the reason for that, the $1.2 million increase, the majority of that was for major capital outlay, and that's not something that would be requested on the operations budget. That would have to come from some CO funding or other capital improvements funding, so we did take that off. The remainder, $29,400, is for some preventative maintenance and maintenance contract and preventative maintenance of smoke and duct detector testing at Juvenile, and Johnson Controls preventative maintenance. If you look at 1770, it's also a similar situation on there, where they were requesting a $117,900 increase for storm windows and men's and women's restroom renovations, and we did take that off of this schedule because that would be a major capital outlay as well. If you go down to page 6.3, and you look at 3150 County Court at Law 5, the only amount that's reflected in here right now is an increase of $28,767, and that is to assist in their overages in their court-appointed attorneys that go over every year. Now, this is not going to get them up to the level that they need, but what we would do is, we were trying to increase it a little bit this year and then evaluate it next year and increase it additional if required. Now, there was a late request that asked to take the associate judge up from 20 hours to 30 hours, and that is not reflected in here at this time. Dale, what was the cost on that?
Right now, the associate judge is working at 20 hours a week, so bringing the additional cost going up to 25 hours a week would be around $10,900 additional cost. That includes benefits. If we go to 25.
On 3300 court administration, the reduction of $24,000. The majority of that is $20,000 that was approved as a permanent reduction to the budget when the court administrator position was reclassified on June 6th during Commissioner's Court. So that's a permanent reduction that will come out and will not be added back to their department. On 3490 and 3492, they had requested $20,000 each for overtime in each of those departments. The recommendation is not to increase the overtime budgets at this time, but rather use the savings from their vacancies that they have. We did kind of look at a 5-year historical analysis on that, and they continually have vacancies that are more than sufficient to cover that, and so we don't think that that we should add $20,000 each for the overtime to cover that. On Department 3510, there is a $108,000 decrease, and that is, as Dale mentioned, the online jury paneling, because that is saving the county in expenses every year. That can probably be further reduced. However, we're taking the $100,000 for that this year, and then we'll reevaluate it next year and see if it can be further reduced. If we go to page 464, if you look at Department 3621, there's a $30,000 increase on that, and JP21 is the justice of the peace that's going to be moving locations, and so that's an increase that's necessary to cover the increased lease amount and electricity that will now be required to be paid. On 3890, the medical examiner, a $17,000 increase. Historically, they have gone over in two of their line items for professional services and other services, and these are to cover costs for such as toxicology testing, biohazard waste, transport. Now, this cost has gone up, this cost has been over pretty much every year, and so the overages have been covered just from 1285 general administrative, and so this is to help them out a little bit, give them a little bit of additional budget in that. It's probably not going to be enough to cover it, but we would take that on a year-to-year basis and reevaluate next year as well. Now, if you'll look down at Department 3520, there was a $36,600 requested increase, and you'll notice that the recommendation is only to increase at $1,913. Now, the reason of that is made up for a couple different things. They were requesting $25,000 additional in temporary salary. We reduced that down to $15,000, and then they had a couple of other requests for cell phones and travel for the attorneys so they could get their certified legal education. Now, the reason that the amount is so low is because there was a reduction in Westlaw from the line item for Westlaw. They eliminated the print books, and so that was resulted in about a $19,000 savings. So once you put their increases and then the Westlaw decrease, the net change was only $1,900. On 3700, the sheriff, there is a $16,790 recommended increase, and that is for our 22% budget of Metrocom that we're responsible for, which is based on the number of 911 calls. If we go down to 3720, you will notice that they did request $645,000 increase, and we're only recommending $61,148. The reason for this is they did request $500,000 in overtime. Last year, from 16-17, they had a $640,000 budget for overtime. For 17-18, we requested that, that was changed. That was increased to $992,000 for a $352,000 difference. And they, like I said, they are asking for an additional $500,000. However, similar to the juvenile department, we did a historical analysis, and each year they are able to cover that overage and overtime. They are offsetting that against the vacancies from the salary savings that they're getting from the vacancies. Now, should that change, if the vacancies go down, then you would think that the overtime would also go down parallel to that. So that's one of those things that we'll just have to evaluate on a year-to-year basis. But historically, they have had those savings in there. Last year was a little bit of an anomaly due to Hurricane Harvey. There was a tremendous amount of more overtime, so there wasn't the savings that we have seen. But in years past and projected for this year, I think there's a $238,000 projected salary savings this year alone.
For both, right?
I'm sorry?
For both of them? The overtime, you say juvenile uses what fills up their vacancies, and they still need some overtime after that, then we can look at that, I guess.
Yeah, that's just something we would have to evaluate. If they do fill up those vacancies, we would think that the overtime would then reduce, but that was something we'd have to look at. Then if you look at Constable 5, there's a $8,751 recommended increase, and that is, they were requesting $35,000 in vehicle repair and maintenance, and we're recommending an additional $5,000. And then they also requested a little increase in overtime and of $7,500, and we're recommending $4,000. And then finally, if you look down on page 6-5, the only one we're going to touch on in this is Department 5105 for emergency management. You'll notice that there is a $9,350 decrease, and the main reason for this is there was an interlocal agreement budget in there for $12,000 that the department head did notice that was there in error, and that wasn't required, and so they requested that be removed. If you go down to the final page on this analysis, which is 6-6, and you go down to the far right column, last number, you'll notice that the only recommended increase for general fund operations budgets is $155,287. Now, keep in mind, this is just the operations budgets. This does not include any salary recommendations or capital outlay, and we will get to those at a later time. Now we're going to move into tab 7, which are our budget challenges.
I got a question.
Okay.
When this transfer outs continued to the airport and it'll import coastal and capital project funds, you said this is transfer out? Are we taking out money from there? Are we?
Right, so these are transfers that are required every year from the general fund to offset differences
Okay.
in each of these funds.
Or to supplement the funds?
Yes.
But that's part of their budget, though? Is that their budget, or is it just an additional to their budget?
Well, so it's shown as a transfer out on the general fund, and then it would be shown as a transfer in on each of the individual fund budgets. So if you were to go to the airport, for example, the airport would show a $63,800 budget transfer in.
We increased to the regular budget.
That's correct. Okay, so in tab 7, budget challenges. So keep in mind that you'll see this total is $2,750,650. Now, these are increases that if the court decides to not recommend any operational increases, no salary increases, anything like that, these are what we determined are the minimum things that have to be done regardless of what other decisions are made. So the first one is $179,857 increase for continuance pay for approximately 163 employees. Now, this is the 2.5% increase that employees have every time they reach an additional 3-year mark. And there's a different group of employees that this affects every year, and this year it's 163. The next line is for $589,805, and this is due to our collective bargaining agreement. This is the final year under the current collective bargaining agreement. It will expire on September 30th, 2019. The next one is the retirement plan increase. Now, we have this highlighted because we are going to talk about the retirement plan in a little bit further, but this is if we maintain the current plan, which the current plan is a 7% employee contribution rate and a 2-to-1 employer contribution rate. That 2-to-1 employer contribution rate, for this year, the requirement for in order to fund that was 12.85%, and next year it will be 13.03%, or $109,973. The next line is the employee group health insurance. Our health insurance fund did really well this year because of adjustments that we made to cover costs. The last couple of years, we've had some really large costs in there, which required some large transfers from the general fund, and so we tried to prevent that, and so that what we implemented this year really helped. And so we want to maintain that going forward so we don't get into that situation where the general fund is having to make those large transfers. And so we're recommending a overall 2% increase, but this would be shared 1% employer, 1% employee, or an additional $95,823. The next line, we do anticipate that a couple of our top taxpayers may file suit. As Dale mentioned earlier, we do already have $1 million set aside for that from this year. It's anticipated that we're going to need, for one of those taxpayers, that we're going to need an additional $1 million for next year. However, that will cover one of the taxpayers. There is another taxpayer that we're anticipating may file suit, and we do have that $750,000 contingency that's sitting in Department 1500 from last year that was not needed for those. We put it in there in anticipation of those gas overages, and it did not end up being needed. So we would transfer that $750,000 over in addition to this $1 million. So there would be a total of $2,750,000 set in contingency in anticipation of these suits. The next line is the maintenance agreement, voter equipment. When the new voter or election equipment was purchased, there is a maintenance agreement that requires every year to be paid. And this year's next year, it'll be $132,192, and there is a 4% increase on that every year. Dale, would you mind hitting up the transfer to the Road and Bridge Fund?
Yes, last year we were knowing the strains on the general fund, so last year we reduced the transfers from the general fund to the road fund by $500,000, making the total transfer $2 million from the road fund. After we did our evaluations of the road fund this year with the estimated actuals and the use of resources in the last 2 years from the road fund, we have decided that we need to put that transfer back into the general fund. It's not additional funds, it's just reimbursing, going back to where we were in the previous years of $2.5 million from the road fund, because they've been using anywhere in the neighborhood of $200,000 to $500,000 of resources every year, and we need to try to work with them to manage that, or we have to get this back to the $500,000 back to the general fund, from the general fund, so that additional funds are not required. So we're just putting the transfer back to where it was for the road fund. For the other increase in transfers, we had some lighting equipment that was repaired in 2 phases. We had LED lighting throughout the courthouse and through the jail. Last year, or a year or two before, we had the air handlers in the jail as well as the juvenile facility repaired. We have agreements to pay those through the energy savings, which we are doing. But also, and part of that is the actual contract with Johnson Control to monitor the energy savings, as well as having to use LMV for engineering services that is being expensed out of that fund. Since we're only transferring enough to cover the debt service requirements for the energy savings, we need additional $150,000 to cover those additional expenses in 1352, or move those additional expenses out into the general fund. So either way, it'll be a hit to the general fund of $150,000.
Okay, so as we move forward, like I said, if you can please keep in mind that these, I'm sorry.
The $150,000, that's to pay Johnson Control?
Yes.
Monitoring that? So we pay Johnson Control $150,000 every?
No, we pay Johnson Control 60.
How much?
60,000.
$60,000 a year
Yes.
to monitor the energy
Yes.
savings, whatever?
Yes.
And is that paying off for us, or how do we know what? Remember, they're supposed to give us a report.
When we did the first phase 1 of the energy savings, part of the agreement was we paid the contract of Johnson Control to monitor the engineering services. They must provide a listing of the savings to Commissioners Court every year, which they do, And at some point in time, I think last year, they were under their savings requirement where they were required to give us a check, which they did, and I can't remember the exact amount, but it was anywhere from $30,000 to $40,000.
So that's only one time, and the other time we've been.
Every other time, we've had energy savings above what they estimated we have. So yes, we have seen some reduction in our energy costs,
The
yes.
savings that we have, we pay them 60,000. So really, say for instance, we save 100,000. We pay them 60,000, so we're only saving 40,000.
Yes.
So how do we know, do we have those breakdowns?
Johnson Controls should provide that to y'all every year, and they have in the past. I know Steve, last time Steve provided the information from Johnson Control, they send that information straight to y'all.
And how long do they do this?
They do it every year.
How long, is it a contract for 10 years?
Another 10 years, yes. As long as the agreement is for the debt services, they have to manage that till, so make sure we have the savings to pay off the debt service. The debt service is another 10 years.
They're in the, fourth year?
Right now, we're in sixth year, I believe.
Six?
I think we're sixth or seventh year. I think it was an 18-year loan, and I think we're in the year 8. So I think it's with 10 years going, yeah, we're 8 years in.
We also hire LNV to do an independent audit.
Exactly, yes.
The court gets an independent audit from LNV to check the checkers.
Okay.
And we
And those two are what we have to,
It's a one-time deal.
those two are what we're
get every
spending.
year. Get every year.
And we do show every year, the last one I remember was the 1 year that they were short of this, but they were required to give us a check for several thousands of dollars, if I remember. But before then, we were saving anywhere from $100,000 to $200,000, $300,000 in energy savings from what the services they provided, or the energy efficiencies that we've got in the courthouse.
So the 60,000 goes to Johnson Control?
Around 60, yes,
And the other goes to LNV out of the 150
yes,
yearly?
yes.
Okay, so if we go over to the next page, we're still in budget challenges. So that previous page, like I mentioned, were known increases of the 2.7 million. These are items for your consideration, other increases. The first one is for the United Corpus Christi Chamber of Commerce. They're asking for $25,000 for your consideration. This, they sent us a letter, and they're wanting to protect the region from aggressive action by insurance lobby and others who may want to change laws governing the Texas Windstorm Insurance Association. And it says one of their goals is to address the makeup of the TWIG governing board. And so they are requesting $25,000 from Nueces County to help assist with this. The next two items are for the district clerk and the tax assessor. I received a request that the district clerk and the tax assessor be brought up to the same levels as the county clerk. The county clerk is currently paid at a pay group 08, and the district clerk and tax assessor are paid at a current pay group of 07. It is our understanding that the county clerk is paid at a higher pay group because she does have the additional treasury function that she's required. I think the district clerk and the tax assessor would say that they have more employees that they're required to manage, as well as their higher bonding agreements. So if the court does want to take this under consideration, I just looked at what the base amount would be to get them up to level of the county clerk. So the base value to get them up to that level is $5,905 for each of them, and that does not include their benefits or any step increases that they would have. The next line we took under consideration was if the court decides to do a 2% COLA adjustment, and the amount for the general fund would be $695,661 to cover all the funds. It would probably be between $750,000 to $800,000. The next line was a request for increased allotment for funeral homes. This is coming from social services. And what's going on here is they've had a couple of funeral homes that have dropped services for us due to the low amounts that they feel that we're paying, that their allotted amounts that we're paying them. And the Director of Social Services, she did take a look at this, and she's put in some recommendations to increase those amounts. But she does fill in her analysis that even with the increase, that she can still keep it within her allotted budget. And so that's why there's 0% impact on the budget there, because even though we'd be increasing those individual amounts to the funeral homes, it would be within her current budget.
So she don't need the money?
No. She's just asking for an increase in the allotment. The next line, I do have a question mark on there. It was requested that we take a look at an increase in jail personnel to see what amount it would take to reduce overtime by increasing the number of personnel. What we did do is the Sheriff's Office did recommend a consultant that they've used in the past for other services. We did speak. Unfortunately, the consultant is no longer located in Houston. He's out of Norfolk, Virginia. A couple of considerations, we didn't think that it would be right for the court at this time. One was due to his timing. He doesn't have a lot of time to commit to this project right now. He probably couldn't commit to it till around November, which would be past our budget adoption time, and so that didn't really make sense. Also, depending on whether he would need to do everything from his office or if he may need to make an on-site visit, which it kind of sounded like he might need to make an on-site visit. His rates do run between $1,000 to $4,000 daily, plus any expenses, so it could be cost prohibitive. So between the timing and the cost, it didn't really make sense to look at it at this time. Also, just some preliminary research that I performed. It does look like this isn't just a number, like a magic number that we could come up with to determine this. There would need to be a full quantitative and qualitative analysis to see if this is something that would make sense. At this time, due to the number of vacancies that he's had historically, it doesn't seem that it would be appropriate to increase the number of employees from what he has right now. So that's kind of where we stand on that. So I don't have a number on that to tell you whether it makes sense or not. Okay. If we go to the next tab, which are some items for consideration, and now these are decreases. So we were asked to look at the impact of a reduction in the Nueces County retirement contribution, and this would be at the employer level. So currently, as I mentioned, the Nueces County does match on a 2-to-1 basis, so we looked at a 1.75 to 1 ratio and a 1.5 to 1 ratio. And we looked at it with consideration of no COLA increase and with the COLA increase. And these numbers that you're looking at right now are just for the general fund. Without the COLA, 1.75, from a 2.1 to a 1.75 would result in a savings of $486,141. With the COLA, that would be $492,870. If we reduced it from a 2.1 to a 1.5, that would bring in savings of $963,971, or with COLA, $977,315. Now, if you do look at the notes below on A and B, it'll give you an approximate savings for all funds. Now, do keep in mind that these are just estimates, because we were just estimating based on the current, or what the payroll would be for next year, so these are just estimates. The next thing that we were asked to take a look at was the elimination of general fund transfers to capital project funds. Each year, each of the commissioners and the judge are allotted $50,000 that is transferred from the general fund to the capital projects fund, and that's $50,000 each times 5, which would result in $250,000 savings if that was eliminated.
Hey, mister, I got a question. When you say the COLA, that's the cost of living?
Correct, yes. We looked at a proposed 2% cost of living
Y'all
increase.
did you check the 2.5 cent? 2.5 cents only 913,520, because if we're gonna go to the insurance, they're gonna take away one, so actually you're not gonna give them two, you're gonna give them one. So why not 2.5, and you take away one anyway for the insurance they gotta pay, so it gives them 1.5. So, that's just something, did y'all figure in 2.5 at all, period?
I think Dell looked at it in a total.
I've got total of value, balance of how much the cost of living increase for any cost of living that you would want. We were asked to do a 2%, but I can give you the values of any percentage you would like, and then we would have to
Well, you
then
gave
talk to our retirement company, see how that
Gave
would
me
be.
2.5 already, it's 913,520, so it's not that much of a difference, so.
Commissioner, that insurance increase, though, that's not a 1% off their salary, that's just 1% in the premium.
So, but if you give them a 2.5, I mean, it's going to reduce their 2% increase.
Right, but it just wouldn't, it's not a full 1% a salary
Yeah.
reduction, though, it's just the
It's going to
premium.
reduce, almost. Yeah, and my deal was a 2.5, then if we're going to ask for anything else, that should be 2.5. I mean, we're giving them something, always taking something away from them, so, yeah, that's, no, I like to have 2.5, consider 2.5 anyway.
We'll get to that in a little bit.
Okay.
Okay.
Okay, tab 8 basically kind of used the information that Christian was already talking about on just the known challenges that we have. The very top of it, you'll see our estimated fund balance beginning is $18,954,609. All the revenue, which includes the adjustments that we talked about earlier without any increases in tax, as well as our transfers, would bring in $89,417,033 for a total available resources of $108,371,000. Our proposed expenses includes the $155,000 change that we've already talked about, but nothing else in the proposed expense, as well as transfers to get $98,130,452. And then we have the known challenges that we talked about, the continuous pay, the collective bargaining agreement, and the other ones we have of the $2,757,000, which would give us an expense of $100,888,102. For budgeted purposes, that would give us a fund balance of $7,483,540. On page 2 of that report, the very top of this is an estimate of that budget numbers, assuming that we would bring in 101% of revenue as we've done in the past, as well as about 94 to 95% of our revenue collections, our expense collections. So if we just do what we have in revenue without any increase in tax, and we do for our expenses, including the known challenges, now again, these are budget numbers, so it would be plus or minus a little bit on actual. But if we do that, our estimated fund balance would go from $18,954,000 to $13,867,000, or a $5 million reduction of resources for budget year 18-19, using those scenarios without any adjustments to expenses or any other savings we might have or increases in taxes.
So on this page, we just did want to point out that for this current fiscal year 17-18, you'll notice that our estimated actual fund balance is the 18.9 million, which is our and our goal is the 22 million. So the goal is the 25%, and the estimated actual gets us to 21. And like Dell was just saying, if we do nothing else for 18-19 except for taking the effective rate and then adding in those known increases that we have, we would be at an estimated actual balance of the 13.8 million, and which is only 15.5%, where our goal is 25%.
Dale, would you explain that a little more, like what we talked about, because that's not exactly right.
Well, again, these are our budgeted numbers, so and you assume the actuals are always going to be a little bit on the positive side, but still, even if they are on the positive side, we'd still be using resources from the 18.9 to, if we don't increase in revenue for taxes or decrease expenses, we will be using resources.
Fund balance,
Yes.
easy to understand.
So you either got to you can make cuts, or you can increase taxes, or you can maintain, because our actual estimated fund balance at the end of this year came in higher because of a couple of things. One, we were good on our budget, and two, because of that savings we had based on the Road District 4 monies. So if we maintain, then we shouldn't see a drop significantly. If we go up on expenses and we don't raise taxes, then we could.
And we know we have an increase of 2.7 million in expenses right now known.
In the proposed
Right,
budget.
correct.
Right.
Okay, if we move over to tab 9, we're going to be talking about tab 9 and 10 right now. Now, we received many requests for recommended adding positions and reclassifications. Obviously, these can't all be recommended, so we did go through each of the requests, and we narrowed it down to the following recommended new positions. Now, this is starting on 9-1 with the general fund. So the recommended new positions for the general fund are from Department 1570, which is building superintendent. It would be adding a construction project inspector with total salary and benefits of $42,152. However, they have requested to delete a position, which is the building maintenance tech mechanic, and so this would be a reduction of $53,460. And then also adding a mechanical maintenance worker too of $34,873. So the total impact for Department 1570 would be $23,565. For 3250, the magistrate court, they are asking for an additional associate judge, but just part-time, and they would just be 10 hours a month is what the request was, and this would be a cost of $6,560. The district clerk, they were requesting that senior clerk to help with their additional filings that they have. That would be $30,320. The county sheriff, their crime data clerk, this is also kind of.
Sorry, 30,000, is this an additional 30, or you only adding 5,000 to 25,000 to make it 30,000?
Right, so the 25,000, that's the salary, and then once you add in the benefits of 5,110, that's where you get the 30,320. And then the county sheriff adding a crime data clerk, and this is kind of in conjunction with the district clerk to help out with their CJIS requirements, and that's an additional 30,320 as well. Constable Precinct 3, they were requesting additional deputies. We are recommending an additional one for a total cost of $42,247. The medical examiner is requesting an autopsy technician for $34,873. However, they're requesting to remove a temporary position, resulting in a savings of $24,911, or a total increase of $9,962. Then the district attorney, also related to the CJIS requirements, was asking for a legal secretary too. That would be $38,375. So the total new positions recommended for the general fund would result in an impact of $181,349 increase. If you go to the next page, this is Department 1377, which is the 1115th waiver, which is directly related with the health department. Now, keep in mind that they are requesting these 4 positions. However, they would be paid out of the 1115 waiver. There's no impact to the general fund, and it would have to be with the understanding that once the 1115 waiver funds are exhausted, then these positions would have to be removed. Now, excuse me. Now, if we go over to tab 10. We're going to be discussing the recommended salary reclassifications. There were several departments that were requesting overall increases for their departments, so we were trying to satisfy that with the 2% COLA overall for all the employees. And then we did take a look at individual departments and made a recommendation on some individual department reclassifications, which is what you're seeing right here. So the first two were for the county clerk, Department 1160. With the reclassification from the secretary to taking that position down to a part-time position, and then increasing the chief deputy from a pay group 30 to a pay group 31, the net savings in there is $13,782. Then the elections department, Department 1190, when you're taking a look at each of those four positions, taking them from their current pay groups up to, most of them are either up to 1 or 2 levels. That would result in a total increase of $10,806. The next department for the tax assessor, there are 2 positions, a senior administrative clerk, which would be reclassified to a supervisor of the satellite office, and that would take them from a pay group 17 to a pay group 19, and information systems specialist, taking them from a pay group 23 to a pay group 25, with an overall increase of $8,806. The next department, human resources, taking the director of personnel, taking her from a pay group 35 and changing that title to a chief human resources officer and taking it to a pay group 37. That would be a $9,707 increase. And then the benefits coordinator, taking that position from a pay group 20 to a pay group 24, would increase that by $9,731, or a total increase for human resources of $19,438. The next one is for the county auditor, taking that from there's currently 2 positions, a GL system programmer and a GL system supervisor accountant, making those the same title and making those the same pay group. Overall impact would be a $6,079 increase. And then Hilltop Facility, taking the maintenance workers, the maintenance workers 1 from a pay group 14 to a pay group 15, and the maintenance worker 2 from a pay group 16 to a pay group 17, or an overall increase of $6,453.
Have y'all ever figured out on the commissioner's court, chief assistants, everybody gets raises around here, we never talk about commissioner's court assistants, so what do they come in? When do we figure them out?
There were no requests for any increases, so they weren't taken into
We're supposed to give all these
consideration.
requests, I mean, when we had the budget time, I thought that was a time to ask all the requests. Nobody came through, so I didn't know later on everybody starts requesting things. So how does this all happen? So we give people time to submit stuff, and then they come back later, a month, 3 weeks later, and start submitting things, and so now we have to decide all this stuff. So I thought that was the reason for the budget, we're asking the departments, give us what you want now.
But we did.
We did.
It gave
I
us
know
a
we
budget
did, but-
pack. We've all submitted that for years. We have a budget packet. We've all submitted our request, and if you didn't submit one, then you didn't
No,
submit
I'm
one.
saying, but was this submitted ahead of time too?
Yeah, we all got budget packets. Every year we get a budget packet, and you put in a request for what you want, and sometimes you get it, and sometimes you don't, but that's how it's been.
I kept hearing we don't have no money, so we're not gonna get no raises and all this other stuff, so I said, well,
Well, this is just proposed. I don't know how much I'm going to support of this. These are all their
yeah,
proposals.
no, I'm just, but,
proposed.
I don't know.
You have the right to make a change up till we select adopt the budget on the 14th.
All right. Thank you. I just asking, sir.
Yeah, and but the assistants get if they would get a raise if we give a COLA raise for everybody, right? Stuff like that.
Well, they do too. I'm just,
Right.
everybody does.
Okay, and then the final couple departments on the general fund, the magistrate, which is Department 3250. This would be a reduction for the associate judge, taking them down from 50 hours biweekly to 10 hours a month. And if you remember, there was a request for an additional associate judge, also at the 10 hours a month. But by changing this one from the 50 hours biweekly to the 10 hours monthly, this did result in a savings of $59,044. And then taking another associate judge from 50 hours to full-time to a magistrate judge, this would increase by $45,707, but the total net impact would be a $13,338 decrease. And then finally, on the general fund, for the ME office administrator, taking that position from a pay group 18 to a pay group 23, or $11,308 increase. So for all the reclasses, the recommended reclasses in the general fund, there's a $35,770 increase. If you go to 10-, here's a couple of the other funds, the recommended reclassifications, one for inland parks and one for coastal parks. And these are both for the directors of each of those departments. And for inland parks, it would be taking them from a current pay group 36 to a pay group 37, with a total increase of $4,954. The coastal parks director is currently at a pay group 35, so taking that position to a pay group 36 for an increase of $4,503.
Is the number on the annual, does that show the current, or does that show with the increase in it?
Right, so that annual amount has the increase in it for an increase of $4,119, which is a 5% increase.
But this is for I'm saying in general, I'm saying the whole category. If you take that, like,
Which
one you
page
just
are you
went,
looking
the
at?
one you just went over, this is the recommended.
Okay.
Right, this is what the staff is recommending and the judge is recommending.
Yes.
So if I take, I'm just going to go back up to, I don't care, the chief deputy here, the 65,250 that has an increase in it, is the 65,250 the current, or is that with the increase in it for the whole category, for the whole line item?
That's with the increase, because if you look at the first column where you see the annual at the 62.2, that's what they're currently at. You'll see a pay group of 30.05 and an annual of 62.12, that's what they're currently
Oh,
making.
I'm sorry, I apologize, I missed that column, my bad, go ahead, sorry, that's me, I missed it.
Okay.
Thank you.
Okay, so those are the recommended new positions and reclassifications. We are not going to go over tab 11 individually. This is basically just a summary of all of the departments, what their requests were for operations, equipment, vehicles, new personnel, to get to their total request. We've already gone over all of that information except for capital outlay, which we're going to hit up next. But tab 11 is just a summary of that, so we're not going to go over that. So if you'll please turn over to tab 12, we will talk about capital outlay. If we first look at the road fund, their current budget is around $600,000. They are requesting a total budget of capital outlay of $1.4 million. We are not recommending that increase because we are recommending that we have to transfer the additional $500,000 to help maintain their fund balance and to help with operations. We don't think that an additional $800,000 in capital outlay budget would be the right thing to do, and so we would recommend that they keep within their $600,000 capital outlay budget for this coming year. The next couple of funds that you're going to look at, so the airport, they do have their own capital outlay budget that would not come from the general fund. Inland parks, they do have a capital budget. Anything that exceeded that would have to come from the general fund, and that goes for the same with coastal parks. They do have their own individual capital outlay budgets. If you go over to the next page, there are a couple of budgets for, related to the health department, and we are not recommending any use of those funds for Department 1354, 1362. It appears to be outside the scope of what those departments were intended for. And then Department 1377, they already have a capital projects, capital outlay budget within that department. All of the general fund departments that follow, all of the general fund capital outlay falls within one department, and that's Department 1900. The budget for Department 1900 has historically been $1,070,000, and it's been that way for the past few years. We are not recommending any increase. The amount of the requests for the general fund capital outlay always exceeds that $1 million, but we do keep it within that. One of the largest outlay requests in Department 1900 is vehicles, and so each of the departments submitted their vehicle requests, and my department will work with purchasing to take a look at each of those requests and see what can be filled. The only other thing I did want to mention on Department 1900, something that we're recommending for next year, is there are always several requests for computers, and not all departments. Some departments know to request them every year, and some departments never request them. And so, working with the IT department, we're trying to come up with a plan, a replacement plan based on when warranties expire, et cetera. And so what the recommendation would be is to take approximately $60,000 that would be solely dedicated to the replacement of those computers. And so departments would be, each of the departments would receive computers based on that new replacement plan, not just when they request one. Now, obviously, if somebody's computer breaks or we have another issue, that would be on top of that in order to satisfy that. But we think that starting out with $60,000 dedicated towards that replacement plan would assist in getting all the departments the computers that they need and when they need it. And then we would have to take a look at that again next year to see if that was sufficient funding or if we need to add or subtract from that. So, in a nutshell, that are all the capital outlay requests. So, as I mentioned, there is no recommendation to increase the overall capital outlay budget. It would remain at the $1,070,000 that it has been. Tab 13 and 14, we're not going to go through individually. However, tab 13 were all the new positions that were requested from all departments. And then tab 9 is where we narrow down those to the recommended positions. Tab 14, were all the reclassifications requested from the individual departments. And tab 10, what we went over a while ago, was the recommendation for those reclassifications. And then tabs 15 through the rest of the way back, this is something that the Auditor's Office also put together that summarizes each department individually by line item so that our budget categories, so you can see the different budget amounts, increases, and proposed budget amounts. So we won't go over those individually either. These are just more for your reference.
That's it?
That's it.
You want to summarize, Dale?
Well, like Christian was saying, we went through this in great detail to make sure we provide you the information that you might need to make your discussion and decision not as challenging as it could be. But we know there's a lot of challenges. We know we have $2.7 million above the expenses that we have to either raise taxes for or do some cuts for that we need to start doing some talking for. And there's some other additional values that y'all were asking for that we could put in for cost of living increases or adjustments for retirement that need to be brought up, and those will affect the budget one way or the other.
So the budget that we have presented to the court, and we're going to take a break in just a minute. First, I want to thank Kristen and the staff. They did a great job this morning, a really great job of detailing everything that was there, and I appreciate the cooperation of the court. The budget that you have before you is a budget based on the effective tax rate going forward.
Right.
The budget that you have before you reduces the fund balance, tentatively, maybe, reduces the fund balance by about $5 million from where we are, in the neighborhood of $13.5 million, including a contribution back to the Road and Bridge Fund. Is that correct?
That's correct.
$13.5 million fund balance is inadequate. So we're going to stop here. We're going to welcome all the comments and opportunities to discuss this. Let's take about a 10-minute break, and we'll come back, and we'll start with Commissioner Chesney. Okay, we'll go back in session. Commissioner Chesney, we can start with you on any suggestions or questions you have, please.
Okay. I guess if you're going to make me start, I'll start. So my entry to this budget is always as well documented in trying to maintain the effective tax rate. So I realize in maintaining the effective tax rate, based on this proposed budget, I've got to cut, we have got to cut, what is it, Dale, 2.765,
At least, yes.
something like that, million, to maintain the effective tax rate, which is the actual rate that doesn't raise taxes. So in looking at some of these things, and let me tell you, I'm open to suggestions on other things too, but to get that kind of number, it takes a pretty yeoman effort to get there. So one of the things that I want to, kind of visit about again, because I think it's important to go back over, we were able to increase last year, if you remember, we came out and we were really concerned about our reserves being low last year. And so one of the things that we as a court did and we voted on, and I think was a good thing that we did, was we were able to use the Road District 4, some of the Road District 4 proceeds, and we transferred that money into legitimate Road District 4 projects within Coastal Parks and within Public Works that then allowed us to net a $2 million savings to the reserve fund. So because we were able to legitimately, and again, the court voted on that, we did a great job. I think it was the right thing to do. But we were able to use that money for Road District 4 projects, which is what it's supposed to be used for. But then the net savings of that was $2 million instead of $16.9 million, we have $18.9. So one of the things I've asked Dale to look at is there another way? And some of that money has been used for Road District 4 projects, and then there's a balance left in that Road District 4 money. So I've asked Dale to go back and in our, he met with all of us, and we just did this, and so we hadn't had a chance to do it yet. I've asked Dale to go back and look to see where we could possibly use some of that money again to legitimately help the county as a whole by using that money for Road District 4 projects that are legitimate Road District 4 projects, but then either building our reserves back up or using those as potential cuts. So that's one thing, and I know Dale hadn't had time to do that, but that's one thing that I've asked him to look at doing. That Road District 4 for historical purposes was created, 25, 30 years ago, Judge. I don't know. It was way before any of us were here. Don't know why they created it, but they did. We've seen some Attorney General opinions County Attorney opinions on, I think, some real problems with abolishing it. You'd have to go get legislation. The money could escheat to the state. I don't think we want to mess with the state jacking with our money by any means. I think that would be a bad situation. And it also talks about, what specifically you can use it for, of which we have previously done. So that's one of the things that I've looked at, and I'm anxious to kind of hear back from.
Do you have an amount?
I asked him to look at least $1 million there of that money.
$1 million.
That's what I asked him to look at, and that's not like set in stone, or,
No, but
I mean, it's a,
hard place.
because I'm trying to get that 2.765 down to zero. So that's obviously, if we can pull another million legitimately and use that to somehow supplement other road district projects legitimately, that will then help our budget by $1 million, then again, that's using that money effectively for road district projects, the way it's supposed to be used, but then also helping the county as a whole by hopefully not being able to reduce taxes. One of the other areas that I do have some interest in, and I know Dale's and Kristen, I think we're running scenarios on that, is the retirement percentage. Currently, and Dale brought this to my attention, I thought it was interesting, currently, we're all mandated to put in 7% of our income, whether we want to or not, we have to. He has heard, and I've heard from some employees, they don't like putting in 7%. They don't like to be forced to put in 7%. They'd like a little bit more in their pocket. So this wasn't my idea, but this is, I think, a good scenario to run. If you look at the potential of, let's say we only, and we could do this for a year. We could just try this for a year. We don't have to do it.
You can do it for
Yes.
a year.
Yeah, we don't have to do
So
it.
you all know, you do not have to make a permanent decision.
Right.
You
This doesn't
can
have
do
to be
it
forever.
annually if you want to.
And maybe we try it for a year and we say, and again, don't know what the number is, but let's say we went from 7 to 5. The result of that is that puts money back in the employees' pockets because they don't have to have that 2% taken out. So that kind of helps some of the things that we've talked about, giving them something back. And it helps us because we don't have to match that 2% as well. So Dale's going to run some scenarios on that. I'm very interested in that.
Okay.
One of the things I did suggest was the 2-for-1 match, looking at doing that. That's a very aggressive type situation. That helps some people. It doesn't help some, because if you don't stay and you don't vest, then you don't ever get that 2-for-1. But it's a huge number for the county. So there could be a combo of that. And certainly that might be something that we look at too. There are certainly ones in here, and I need to dissect it some more. I mean, I'll be honest, and I wouldn't if I didn't. It's real hard for me to support no offense, it's real hard for me to support a raise for an HR director that's going to put her ahead of 2 elected officials salary-wise that have 100+ employees or whatever they have. I've got some issues with that. I'm going to look at certain things in that respect. But those are kind of my big ones. I did suggest also, one of my suggestions was the precinct funds. I'm not trying to get in a pissing match with everybody on that. We got a little cross on that last year, so I threw it out there earlier this year, so it wasn't a walk in and do it the day of kind of thing. We all do have some bond money now that we have for our projects, so that $50,000 on a one-year basis wouldn't be as hurtful to all of us, but it would also save $250,000. So it is a potential $250,000 if we all took our 50 and 1 year, put it back in. I personally think with those issues, if we can come up, because that Road District 4, that's a big chunk. And again, it's not my money, but it is money that is technically supposed to be used for Road District 4, which is in my precinct. But I gladly, for the betterment of the county and gladly for the betterment of not raising taxes, will offer that up. Sounds like I'm giving it, and I don't mean it like that, but I'm trying to say I'm very much more willing to put that on the table as something to discuss, because I think if there's a way to do that we can cut that 2.765 out and not raise taxes and maintain the effective tax rate, that would go a long way in starting it, along with some pretty big ticket items, which are the 250, the matching, and the percentage. I mean, I think with those 3 things, we could get there. And now, there's always the across-the-board cut item that got thrown out last year by me, didn't pass either. You could tell every department that they have to, and I think what Dale and I talked about was if we did it as just if we didn't have all these other things, you could do a 3% across-the-board cut, and that would immediately reduce that 2.765. I think I'm not advocating that all of it should come from that across-the-board cut, but an across-the-board cut is an option to look at. And if we do all these other things and you combine it, then it might be a 1% across-the-board cut. And all of a sudden, you've gotten down to where you maintain the effective tax rate and you still satisfy, the needs of what you're talking about. So those are just some, I'm trying to go through that as quick as I can. I think that's my main things that I
have those numbers tomorrow?
I can, I'll have to work on the balances for the Road District 4. Christian already has some scenarios on the retirement, so she should have that available for tomorrow.
As well as reducing the contribution
Yes, sir.
from
For employee and employer?
7 to 5?
Yes.
Okay, we'll do that tomorrow, and that way we can make some decisions.
And again, that wasn't even my idea, but I think there's some potential positives to that, because I've heard from a lot of employees, they don't like putting that 7% in. They don't
Right.
like being mandated. So maybe that could be something.
We'll look at each one of those tomorrow and see if we can get some consensus. Those are good suggestions. Thank you.
Yes, sir. I think that's what I've got for now, and I'm sure I'll come up with some other things
sure you
based on
will.
what others people say, so.
Okay,
Go ahead.
Jag?
Okay, well, there's a few items that I'm also looking at salaries. They're going to come back and cut back some of those salaries, and maybe some cut back completely. But, on the effective tax rate, I think what I understand, Dale, we were like 2 to 3 million short. You really want to look at the big picture. We need like almost $3 million to really stay on top, right?
Yeah.
Not 1 point whatever or 2.7, but I think it's really 3 million that's going to get us to the top, right? And I'd like to request a workshop on Road District 4. I'm still confused on this Road District 4, and I got an opinion from the county attorney, and I know some people don't want to agree with the opinion, but, I don't know how we started moving this money around even before the commissioner's court approved anything, but, when I met with Dale, I think this is already like, we're getting money here, we're getting money here. I said, when did we decide that? This is something that given the opinion says that we all have to do it together. So I don't know, can we have a workshop, Judge, on this, on County District 4, to see how we doing this, how we spending this money? Because I think if there's $4 million there, I don't know, we can put it in the reserve fund for roads and just keep it there for roads.
That's not what the county attorney said, Joe.
I know, I'm just saying that, but she didn't say we can give it to coastal parks either, and she didn't say we can give it to public works either, but it's for roads. So, I just think we need to look at this again, the District 4 road, and look at it, because if we're doing monies to replace monies that we were given coastal parks, then it's for operations, and you can't do operations. So, again, I asked Dale, the money we give him, was it for operations? Says yes. Or replacing that money? Yes. So it's for operations, so we can't do operations. The retirement thing, I agree with Brent. I think it's a good idea to look at that, but also the 2-for-1 match. I don't want to touch that. And a lot of employees, they look at the retirement. That's the only thing they really have to look for is the retirement. If they stick around, those that stick around, and I think you look at it, I would say the biggest percentage of the employees, they stick around because they're looking for that retirement at the end to help them out. So the 2-for-1s is good. The retirement, if you want to bring it to 5 to 5, I don't have a problem with that. But I think some of the salaries have to look at maybe some of the salaries are too high, maybe cut them back completely. We have to look at that. To me, the cost of living across the board should be 2.5, and basically because of the insurance also that we're going to give them 2% insurance, 1% for the employees, 1% for the employer, which is the county, and also, but I'm thinking if 2.5% across the board, we're not talking for a lot more money. If we can find those monies once we cut somewhere else, I think we should have a 2.5% across the board. This gives the employees some kind of an incentive also to be looking for not in a raise, but also in the cost of living, where actually, I think it'll be in their pockets also in that area, and instead of in the raises, it'll be better off in the cost of living. When we look at raises or looking at moving things around, also monies, somewhere we left our JP case manager out of the whole picture here because, the judges are JPs, they're judges too, and they need this case manager to work with the JPs, and I know I got from Gail, from Kristen says they only have so much money for next year, the budgets will be down for next year, and so I said we have to look at that too. If they serve 3 judges, $30,000 to supplement the balance of that fund, because they make so much money, but there's always a $30,000 short, I think, or there will be next year. So I think we need to look at that to see what can we do to work with the JP case manager to continue helping the JPs.
One or?
One, no, well, not even one, Judge. I think I'm asking to look at his salary and increase.
All right, so what's happened on that JP case manager is for the past several years, that position was working part-time, and so there was always enough to cover in that budget. There were sufficient funds. But the current case manager has been working full-time for the past couple of years, and the collections are down, and so collections are down, and then when he's at his full salary, what's going to happen is they're going to run out of fund balance in probably about a year and a half is what it looks like. And so other than, doing some sort of transfer into that fund, or finding ways to increase, collections, then there's no other sources of income in that fund and to cover it. And the case manager has been diligent. He's not overspending in any categories. He's maintaining within his other budget categories. It is the salary, because he's working at a full-time capacity now, that's causing the overage.
Yeah, as Christian was saying, they average about $47,000 to $50,000 in revenue every year, and his salary plus benefits is right at $40,000 to $45,000. So it doesn't take long to use all the revenue, not counting the rest of the expenses that are part of the fund. And as Christian said, many years before, he was working part-time. Now it's at a full-time level, so we need to find, and I've talked to my staff and the Justice of the Pieces, we're already charging the full amount of fee that we can, and the collections are where they're at. Unless we can try to get more collections, that's the best we can do. Unless we split this position into half in one, half in the other, or move it to some other, that's what y'all have to decide.
That was kind of what I was looking at.
Yeah.
Okay.
Just so we have enough funds to pay. We don't need another
Yes.
person. The one there will probably do. So
Look at that.
of course, the constables, I understand constables need that person real bad, so I think that we need to maintain that extra personnel there to provide security out in the rural areas. And also the JP County Court number 5, I can understand the judge there. So, instead of having another full-time judge there, I think that if you provide the half of the salary for that one that's there, with that one full judge there, instead of the 20 hours, make it just a regular 35 hours or 40 hours, I think that would help the judge there eliminate some of those backlog cases that he has. So, and if he does that, then it might be also more revenues for the county. I'm not sure, but the other thing that I was looking at is that I too think that possibly sometimes we overlook certain things in our staff, and we want to keep our employees, and our employees they do good work. They're the ones that maintain all the bottom line work, then sometimes they're the slowest to come up. So I'm going to really push this 2.5, and I kind of like the idea about the 3%. Maybe we can come up with something that maybe we can get 3% across the board. If we can get rid of other things, I don't know what else can we get rid of, Judge, but maybe, hopefully we can come back and look at some things that we can do. But I think that we are, if, again, I don't know, the district board for really what concerns me the most. I think that we need to really look at this and where we're doing, what we're moving. And I think that what we do here, and I know we're going to vote on it here, I hope, of the moves, the transfers. To me, I feel like transfers have already been done already, but I think we need to look at those transfers here and find out if we're going in the right direction or not, and make sure that we stay with that opinion that we have here, unless we don't want the opinion. But I think it's important that we do that, because if we're going to use, I don't know, and I'm not clear with what the county attorney also said, that we could use it any roads as long as it's approved by the Commissioner's Court.
Adjacent to Road District 4.
Well, no, but it also says there, also, Judge, if you really read it, it says there that it could be any other road as long as the Commissioner's Court comes back and supplies or gives the reasons that why the road needs to be done. they start with adjacent to precinct 4, then it says it could be any road, but as long as the commissioner's court is the commissioners for that fund, not a commissioner, not a judge or whatever, it's the commissioner's court. So, I think, but it's also said that it could be any road, so if it's only road that, we put in already 800,000 at Public Works, I guess, right now?
No, Joe, you're not reading it right. Listen to the answer. The answer is, wait, here it is. If road district funds are to be used outside of road district 4 jurisdiction, the commissioner's court, sitting as road district 4, must make a determination that the improvements are reasonable, necessary, and beneficial to all taxable property in the district, i.e. road district 4. It doesn't say you can use them in other places around the county.
So why is it going to Public Works then?
Because they're used for public works projects in road district 4.
So do we have that many roads in District 4?
They were used for road district 4 projects in Glenn's budget.
But they also said
Road
that we have to
District
be
4.
specific of which roads we're going to use, and I don't see actually any roads that.
Joe, I'll be happy to take that $2 million back and put it back in road district 4 that we put in the general fund. If you don't want to use it.
It's not yours to do anything.
Well, right,
It's
and
us.
we voted,
It's up to
and
us.
we voted on it. But I'll be happy to rescind that and take it out of the general fund and put it back in road district
This is the
4.
problem we're having.
You want to make that motion?
You think it's your money,
No, I don't.
somebody else is doing things behind doors or moving monies around.
Let me tell you something, Joe. If you accuse me of that one more time, you're going to have a problem. We voted on it in public. If you missed it, that's on you. You missed it. We voted on it. Yeah, but you keep saying we're not doing things right and we're not being transparent. We voted on it in public. I can't, if you missed it and you don't know what you voted on, that's on you. We voted on it. It was posted on the agenda. The judge asked me to explain it. I explained it. No, but you made an accusation. You lost the floor. You want to make an accusation of not transparency? Then let's back it up. Take the floor, but I'm tired of your accusations.
Go ahead.
You just make crap up.
So I'm just saying that this is why we need a workshop in
We don't need a workshop, Joe.
This is a workshop. Let's talk about it.
This is
It's very
confusing.
clear.
Let's talk about it. Talk about it all you want right now. It's a workshop.
So what happens to the other $4 million? Where do they go?
It goes to the precinct 4.
Road District 4 monies that have been, there have been monies put into Road District 4 projects. There have been money put into Coastal Parks for Road District 4. There have been money put into Public Works for Road District 4.
Where's the $1.2 million going to?
What 1.2?
The one we assigned to Coastal Parks.
To Road District 4 projects that were allocated for
Roads.
for road projects in District 4.
That $1.2 million can be used for nothing else except roads.
Right.
Okay, what you're saying now. Dale, is that what you told me when we met? You said it was for operations.
Well, the Coastal Parks also has some road functions that they do for it by beach cleaning and access roads that they maintain, and you'll have to work with Scott and see how much of that road is, the work that they do for operations is road work. So I know part of it that they do is not just general operations.
Well, this is where it's confusing. So,
Judge, may I ask this, because this is new for me, I know that y'all got
Yeah, sure.
$6.8 million from the port for the sale of this, was it a road?
6.7. Yeah.
Okay, so I think what he's asking, I think what he's asking is he wants an accounting of what the money was spent for. I think that's what he's asking Brent. I believe that's what it is. And I wasn't here, so I'd like to see it as well, because I trust the fact that it was spent wisely and put where it was supposed to be, but I believe that's what he's asking for.
It hasn't been spent yet. That's what we're trying to do
Has
right
any-
now.
Brent, some of it has been spent, hasn't it?
Yes, because it's in the Public Works budget for roads in Road District 4, and it's in Coastal Parks budget for roads in Road District 4. Then the $2 million that wasn't needed was then put into the reserve fund because we didn't have to make that transfer, as Dale explained earlier, as we've all explained 100 times on this thing. So that money, so absolutely, give him whatever he wants on where the money's been spent. I don't care.
This isn't going to have anything to do with the budget for Coastal Parks that we put in, other than the road repairs that you have to do in beach operation cleanup. It can be used for that as
Yes.
well, correct?
And part of the Coastal Parks is beach maintenance, access road maintenance, and as other with, we'll have to get Scott in here to see if that 1.2 was theoretically used that.
And
It
some of
wasn't
this-
Public Works, it was road fund that we gave the $800,000,
Oh, my
actual
bad.
road fund,
My bad.
which according to Mr. Sullivan, before he left, of his total $8 million worth of budget, at least $850,000 is spent every year in Precinct 4, every year. So the $800,000 that he put in is officially allocated to the road funds of Precinct 4, according to the road engineer.
Right, and that we got those numbers from the road engineer, so.
Okay, and I just want to make sure we're doing the right thing here, Judge. I mean, now, when you say $2 million in reserve funds, what do you mean reserve funds? I don't understand the reserve funds.
General fund has a general fund reserve, which is the fund balance. Because Road District 4 was able to transfer $800,000 to the road fund and the $1.2 million to Coastal Parks for road funds, the general fund did not have to do that transfer.
Which saved the county $2 million.
Which allowed the general fund to increase their fund balance by $2 million.
Okay.
Because they did not have to,
So we
they
just
didn't
have
have
to
to
say-
fund those two.
So actually, we just saved those $2 million from coming out of the general fund.
Correct.
Right?
Right.
So that gives us a balance of what in the road fund?
No, in the reserve fund.
Reserve fund, the general fund.
No, I'm talking about, that gives a balance in what, in the District 4 road fund? How much balance is we?
Right now, last time I read, it was at least $4 million in the road fund.
No, it's two, no, because
Well, it was for Pottery Bali and I.B. McGee road work for that, so it's probably 2.5, 2.6.
it's about 2.9 something
Yeah,
that's in
that's
there.
right, that's where I'm confused, guys,
It-
I mean,
It's,
we're only talking about 800,000, when we're talking about 100.2 million, okay? Is there some other monies that went somewhere else or what?
yes, into Padre Valley and to I.B.
I'm
McGee.
asking Dale, Dale
That's
should
what,
know.
that's what it is. The appropriations were put in for the road construction and the parking area in Pottery Bali as well as I.B. McGee, roughly $1 or $2 million there. The $2 million,
Parking lot or road?
roads, both roads and parking. You'll have to get a detailed list from the engineer on Pottery Bali and
And some of that has not been
McGee.
spent because we have not
That's
done.
$800,000, all right?
No, that's not the 800,000.
Because the 800,000 is going for roads,
Right, it went into the road fund,
road fund.
Fund 12, road fund, which is
1.2
managed by
million.
our engineer.
1.2 million went to coastal parks for roads or parking lots or whatever they do.
Right, beach maintenance, yes.
All right, so what else went out? That leaves us almost $4 million. So what else?
That's it,
No, and then the 1.8 that he just mentioned to you for Padre Valley,
1.2.
I.B. McGee.
Yeah.
So what's in Padre Bay, what is that, for what?
Those are the projects we have currently going on at those locations.
You have what?
The different projects we got going on
What kind
in
of
there.
project are you talking about?
Well, yeah, roads and RV
The
locations and piers and buildings that they're working on in Port Aransas.
The I.B. McGee has not gone out to bid yet because we're still waiting on final specs. So that money has been allocated but not spent.
You say piers, that's not a road, right?
Piers is not correct.
I just, well, pier, no.
Right.
And how much is allocated for I.B. McGee?
1.8.
1.8.
1.8. That's $3 million right there.
3.8. The 2 plus 1.8, which leaves a balance of 2.9 something, of which
The other thing that I wanted to see if we could consider again, we did, probably a couple of years ago, Judge, I think it was 2 years or whatever it was,
Okay.
is consider the hiring freeze that we did, that brought in quite a bit of money too. I think we did, I don't know, if we did it for a year or 6 months or whatever it was. But, something I think that either them reducing or cutting back completely, maybe we need to look at probably, maybe having a hiring freeze for,
We did a 6-month hiring freeze before, and it saved us about $600,000 because we took it from generally about 30 days to 60 days is what we did. Now, we got a lot of pushback on that, but that's an option that might give us a savings, but it's hard to measure that completely, but we do know that for that 6-month period, we had the additional 30 days in effect. It saves us about $600,000.
that's something that I want to look at.
Okay, we'll look at that. Okay,
Not saying it's all for now, Judge.
all right, well, that's fine. John,
Thank you, Judge.
thank you.
My concerns, and I know that, we all got an opinion on on Road District 4, out for us to review. I'd like for her to be at our meeting tomorrow to clarify, just to
Sure.
kind of
We can-
clear the air so
I
that
should
we
be
have
back.
any any questions can be resolved then, because I think that's a big part of our discussion, and just so that we're all on the same understanding. And because
I'll ask her to be here.
I believe, opinions many times can be read differently. And also the retirement, I want to make sure, and I trust you, Judge, that you know, but I want to make sure that if we make any changes to any reduction in contributing to retirements, that is something that if we commit to it, that we can come back. If we do it for 1 year, that there's nothing in state law, statute, or our own policy that would prevent us from the following year being able to go back to the 2 to 1.
Yeah, that's correct to my understanding. I did contact TCDRS.
You did.
Send us an email
Can you-
today if you can.
Send an email, sure. I will contact them.
Like I said,
I think
not
that's a good idea.
I doubt y'all,
That's a
but
good
I want
idea.
us to have it,
That's a good idea.
so we
I
can all
won't be here,
understand.
you gotta live with it.
Right, and that's people's planning for their futures, and
Yeah.
I agree. I think that when I first came in, that 7% was somewhat of a sticker shock, but then, of course, you appreciate, in the future, that's going to help.
When you're my
pay
age,
off.
you appreciate that.
It's going to help pay off, so I have no problem with that, but I do agree that if we can have a reduction that's going to help employees, that could help employees in some, get a little bit.
We'll get an email from
Right.
them, so we'll have it tomorrow, please.
Yes, I will contact them today.
Thank you.
Thank you. Dale or Kristen, if, once again, we need to make some sacrifices, I think, as a court, and we need to look at where can we make some cuts, if they're not huge, but I think that $250,000 is something that we can, kind of show we ourselves are making some sacrifices in what services or funding that we have on our own budgets. And so if we can get a balance for all of us, or maybe not all the commissioners and the judge want it, but if you can get for me the balance of my bond projects that I have to date as far as funding remaining, what hasn't been committed, just so I can get an idea of what we're talking about for the elimination of the general funding transfers to the capital project funding. So, because I know y'all proposed, was it $50,000 for each of us here in the court, which would give us a $250,000 contribution that we can put in getting to our, helping get a balanced budget.
And just for clarification, that didn't include the outside agency, that was just the precinct money, because I know everybody's got
Right, just
commitments on some of that
just a
outside
piece. If you
agency.
can get us just a breakdown, I'd like it for myself, just to kind of, I haven't looked at mine in a while, and I don't know if the rest of the court needs
John,
that,
if
but
you
if,
look at the,
Actually, on Wednesday, you'll have the monthly financial report. It shows by commissioner, each balances, each of their values.
it's on
So
there, okay, then
Yeah.
I will look at that, just because I know that a lot of my bond projects were committed before I even got here, so.
you and Carolyn share the same deal.
Yeah, we're sharing the same issue. So, so that hit could help. I mean, if that is a hit and that's all we really have to use throughout the year, then that may be something I'd have to think twice about supporting a full cut, or maybe even half of that to get us 125,000, 25,000 each member of the court. But just so we can have some options there when we go forward with this.
that list in the back is covering what you have in capital projects, which is the $50,000 we receive every year from the general fund for capital projects, not your special revenue funds, just your capital projects, plus any of your CO funds that are allocated to you, and where it's at, and what was actually budgeted, and where we, in the expenses, plus what's remaining.
And another thing for me, and it's symbolic, but I think that, for me, I try to look at where I can make cuts and maybe more. And I just want to say also, I appreciate all the elected officials and department heads for heeding the warning and really being partners with this court. The judge has been talking about a long time, since we literally took that hit from Hurricane Harvey, that this was going to be a tough budget for us. And to see department after department, office after office, being under budget and being responsible for their money and trying to find other ways to make cuts, we're all on the same team. I know we have our problems sometimes. We have issues that come up with some officials or department heads that we feel may not be working with us the way that they should, but it seems like almost everybody has made some sort of sacrifice and really been conscious of how to reduce our budget. And that to me, showed earlier this morning with the presentations that y'all gave us. So I want to say thank you all to be on top of that, to the judge, of course, leading that charge, and of course, all the department heads and elected officials for doing their part and actually making it happen. So with that being said, for the next budget, I've been looking over the last few budget cycles, and there's some line items that I have in my budget that aren't going to be big, but I just would like to be able to show that I have put some effort into trying to reduce, and then if I can do that in the following year, I'll do that again. So I'm looking at line item in my budget, code 5217. If I can have a $50 reduction in that, postage and FedEx, I know we can't predict how much postage or mailing services we may need, but at least that much for now. 5240, maintenance and repair equipment, and that's $800 line item, and I'd like to reduce $500 to at least give me something if I do need to tap into that line item next year. And 5410, other services and charges. I know that may be just a catch-all, but I haven't used it, and my predecessor didn't use that. So I would like to see a $200 reduction, so my math is correct, $750. Once again, it's not big, but I just would like to be able to put some effort into trying to reduce. I think, the budgets we're dealing with are tight. Everyone would like to deal with more, and we'd like to give our assistants more for all they do and everyone else, but at least that cut, and then as another year, I get another year under my belt, and I think I've been really responsible, as we all are, in trying to manage our own budgets, that hopefully there'll be some areas that I can make some additional movement there. I know a big chunk of this obviously is our salary and our benefits, and that's something that we can't touch, and so I wouldn't, but at least in some of the other areas that we can still try to reduce, and I'll look at, and I don't want to touch the travel right now because I don't know what the legislative session is going to have for us.
It's going to be bad.
And so we may have to get up there a bunch of times. I did that last year. I went up several times for many days to get up there, and so I want to leave that there. But obviously in an off year for the following year after that, look at reducing, shrinking that, somewhat. So at least that's just my recommendation for now on my end. But if we can get that opinion from TCDRS, and then if we can get the county attorney in here to help us, and I do think that the 60-day freeze, I think that's excellent. I don't think anyone likes it, but everyone's kind of learned to live with it, and so I think that's a great idea. If that can help $500,000 or $600,000, that's something. And like I said, I definitely would look at the 250 as well, but I'll look at our book and see where I'm at with my budget balance, and see if that's something I can afford, because I do want to still have some money next year to be able to meet some of the needs that we have for our constituents when they call or when issues come up in fixing roads or other issues. So, thank you,
John.
Thank you.
Thank you. Carolyn?
Okay, 2.7 million above expenses, that's a lot of money. So Brent, I like all your suggestions. In fact, all of y'all, I think that we got to look at every one of those. And I appreciate the fact that if we can get 1 million from that District Road 4 fund, that would be great, because that's almost half. That's a third of it. In the public sector, when you have a budget like this above expenses, what you do is you cut. So I'm for cutting 3% across the board in every department. I'm totally for that. I think that we need to look at the the precinct funds. Of course, I'd like to look and see what we've got, since John and I seem to be at a deficit here, it sounds like. And the matches, I think we have to do that. I think we have to look at that, and I think that you should give the employees the opportunity to keep more of their money. I think that's huge for them. And when you have expenses like this, you have to do freezes. You do. You have to freeze. I'm even for hiring freeze and a raise freeze. And I'm certainly not for human resources getting that huge amount that has been requested. I almost fell out of my chair when I saw that. But I do want to ask about some other things. We talked that there was a 2.5 increase that you get for 163 employees. Who are the 163 employees? How did they get the 2.5?
After reaching 3 years of service, anybody after 3 years of service get a 2.5% increase in pay in accordance to a resolution approved by Commissioners Court starting in 2007. So after 3 years, then you get an increase. So every year a different number of employees reach those levels.
So it covers every employee.
At some point in time, yes.
There's only 163 right now.
Just this time, because this is the
Covered.
third, we're in the third cycle of the continue, so this is the smallest number of employees this year that will receive the continuance. Next year will be the largest number because it's theoretically the beginning of the cycle over again.
Okay. All right. There's a couple of things that aren't on here that I think we have to look at, and one of them is the maintenance worker for the jail. I've got a list over here of how many times they go to the jail just for maintenance, and it is crazy because it looks like it's a huge amount. I don't know what the total number is per month that they do, but I mean, just like in April, 253 calls for maintenance in the jail. When I was in that meeting where it was being certified, there was a report in 2006 that said we needed that. Well, that has been ignored by the court. And she continues to say we have got to have that because they cannot sit 24 hours working for something to be done. So I think we need to look at that and try and get that maintenance worker. And I think that the court needs to be the example for the rest of the county and that they need to take some sacrifices. And this is nothing against anyone, but within the Commissioners Court, we have got a secretary each. The judge has a secretary, which he needs, and you have I'm not sure what, she sits up front, so sits up front for everybody and answers the calls, and I'm sure she does way more than that.
Kristen,
It's Mona.
your new employee that took Vicky's place.
You're talking about the employee in my office?
No,
or-
I'm talking about for us.
He's talking
Monica.
about the judge's executive secretary.
Monica.
Okay, Monica. So, and I get that, but within the Commissioners Court, we each have a secretary. I don't think we all need a secretary. Now, everybody's head's going to roll that's sitting in there watching this, the secretaries, but I think we could share secretaries. And if we did that, that would be 2 secretaries. We could hire a maintenance worker. And I'm willing to do that because I can do a lot of this stuff myself. Maybe you guys can't, I don't know. But I think within 2 secretaries, we could do that. So I want y'all to just think about that anyway. And then explain to me what the $20,000 is each year that the commissioners get. What's that for?
Which one?
They get $20,000 and they give it to all of these different nonprofits.
Correct. Every year, we give them $70,000, $50,000 for you using your precinct, and $20,000 for outside entities like Charlie's Place or your diabetes associations or breast cancer association. Anyone that y'all determine is a outside contract that y'all can provide to, y'all provide those funds for those. And it averages $20,000 a year.
Okay, did we just come up with that, the Commissioners Court come up with that to say they were going to do that? I'm trying to figure out why we do that. I think all those things are great that you do, but this is taxpayers' money, and I would think they would get to choose where their money went. And so the different nonprofits and stuff, I'm not understanding why we're doing that.
So these are for services that would otherwise have to be performed by the county, and so the Commissioners Court has chosen to contract with these different outside agencies to perform those services.
Why would they have to be performed by the county? Charlie's Place is going to be there whether we do it or not. I mean, Charlie's Place is there.
It's the type of services, so the county would have to be performing that service in-house, but instead they're contracting it out.
All right, I don't understand that because Charlie's Place is their own entity, and so what's the court have to do with that? That doesn't make sense to me.
Just what the court.
I think they probably wouldn't be able to serve all those people they have if there was we didn't supplement them with a certain amount of funds.
Well, these are small amounts that y'all are giving. You're giving like $1,500 to this and $1,500 to that, and this is going to make you mad, but this is what it looks like.
Those are nonprofit agencies that.
They're all nonprofit, the one that I saw, but
Services.
what it looks like to me is just a campaign thing. I'm sorry, I have a problem with it.
I can get probably a better explanation from the county attorney, but I did have a discussion with the county attorney's office on this, and that's how it was explained to me. But I can see if we can get some further explanation.
I'd like further explanation to tell me that the county's supposed to do something like that, because that doesn't make sense. That sounds like something that, if I want to give to the Heart Association, I'll go give it to it. But this is county money, this is taxpayers' money. And so we're picking and choosing what organizations we want to give their money to. That just doesn't make sense to me. So to me, that would be a savings if we could save that. I went over, but all the suggestions are good that we made, and I think that we're going to have to make from big items in order to get the $2.7 million. I had my CPAs go over this budget for 2 days. And what we came up with, and you're not going to do it, but this is what we came up with. This is the private sector is what you would do, is we actually looked at what was actually spent, because that's the truth. The truth is the CAFR and what was actually spent. So if you actually did the budget with what you actually spent last year and gave a 3% inflation, you could save $6 million. But this court's not going to do that, and I know that, because I've already ran it by Kristen and Dale. But that's what you do in the private sector. I mean, your budget's high, but we didn't spend that, and I'm willing to take the $20,000 off. I'll give Commissioner Pusley this. His budget was like over $20,000. He spent under 20. He saved 20. And so you can take that off mine. I'll stay with what the actual was. Because if you can do that, the actual last year, you can do it again. So why would we want to go up when we made it with what we did last year? That's it.
Okay, anything else?
And that kind of bleeds into a little bit of what I was talking about with the earlier, because we budget an amount and we underspend every year, which is really good that we do. Thus, that's why I don't believe that $13 million fund balance will be where we're at, because we're not going to spend as much as we budget. So it's conservative budgeting, governmental budgeting, right or for wrong. But that's where I think there are cuts available in the budget, because I think we do over budget, but it's a conservative over budgeting. Whether it's right or wrong, you're correct. It's definitely different, and that's why I always feel like there's room to cut, because every year we come in at 94, 95% of what we budgeted, which is why our reserves have gone up, which is good, because we do have to increase our reserves, and we do have responsibility for that. And so I think if we cut the 2.765, I think our reserves, and Dale, correct me if I'm wrong, and if we cut the 2.765 and we spend 95% of what we budget, our reserve should go up next year, Dale, right? In theory, if those things happen.
Would depend on how the expenses throughout the county are, yes.
Well, right. If we cut the 2.765 or whatever the number is, and that's what you told me, it's 2.765 to get to the effective tax rate, whatever that exact number is, and we spend 95% of what we budget, then our reserve should go up. I get it, if something goes bat crap crazy or whatever, I get it. If we have a bad health year, if we have I'm saying if those things happen, then our reserve should go up if we cut the 2.765 and we spend 95% of what we budget. I mean, it has to. That means there's a savings.
Yes.
Theoretically, yeah, you're correct. If your expenses are right where they are this year and the revenue is right where it is this year, next year, then yes, theoretically it would be correct. But we have to know that without cuts, we have to increase it by 2.7.
I got you. No, I'm saying if we cut, if we make those cuts, and if we spend 95% of what we budget, then in theory our reserve should go up, which is what you do want your reserves to go up.
Well, and theoretically, of the effective rate, your reserves won't go up significantly because we're thinking about the same amount of revenue. So it would be well, your expense will be a little bit lower, but theoretically it'll be like it's almost stagnant. It'll be equal because we're only increasing a small amount of this. If we cut 2.7 and keep the revenue where it's at and the expenses where they're at,
then we ought to have.
You might have a small increase, yes,
Right,
but not as significant.
Well, you say not as significant. 5% on a $107 million budget could be a couple $1 million.
Won't be that high.
It won't be that much.
I mean,
But the theory is correct.
theory. I mean,
All right, now, let me start summarize. If we're okay, let me summarize. Did you make notes about everything that everybody asked for?
Yes.
Okay, so tomorrow morning, what we'll do is we'll take each one of these items that have been brought up, discuss it. Let me remind you that in order to make something happen, you have to have 3 votes. And so, whatever we're going to do, to affect whatever we're going to do, we're going to have 3 of us agree to do that, to move into the next phase of letting them restructure the budget based on whatever we come up with. So tomorrow's voting is voting on possible changes.
voting, are we?
Hmm?
We can't vote?
No, I mean, there's actually no
Well,
Rec-
indication.
recommend-
Indication, recommendations. Thank you. Thank you, attorney. Thank you. Anyway, consensus. Then with that guidance, we can let them go back to work and bring us back, and that means we'll have to have another budget meeting on
Right, we'll have to use the August 13th and 14th,
at least one day,
yes.
13th. Is that okay with y'all? Because I think you made some good points, and it's going to take some discussion. Let me, out of experience, caution you that the only reason you have a fund balance is you have a float. And the only reason you have a float is because you're not fully employed. So the difference between we budget 100% of the positions for 100%. That's all public bodies do that. The city did that. We do that. So if you have 100 employees in your budget and they're $50,000 apiece, you budget 100 times 50 in the budget. The reason why there is a delta is you don't hire 50 people for 365 days. So every one of these departments out here who is understaffed by one or more people, that's your float. That's the difference between the fund balance and the budget. So when you start talking about savings, if you want to talk about why we spend 95%, how much of our budget's people? 69, 70%?
65%, yeah.
Yeah, 70, it's a 65%. So if we have 1,000 people, and we have more, if we have 1,000 people and they all make $50,000 a year, and they don't, Joe, okay, Joe knows this and I know this, but if they did, we would budget 50,000 times 1,000, and that's the budget. At the end of the year, we didn't hire 1,000 people every day for next year. So the difference between what was hired and what the budget was is your float. That's the only money we have.
Reserve money.
That's our fund balance. It's the float. Now, if you put a freeze in place, you stretch out the hiring process, and that's how we save $600,000. And we'll look at that. I'll look at that with you guys and see. Now, I want to tell you, that is the least possible, anyway, people don't like that. But anyway, we can look at that. But that's your difference. It's not like we got a bunch of money sitting somewhere. It's just we didn't fully employ the county. You got 35 vacancies in the sheriff's department. Every day you have a vacancy, that's the float. That's the difference. And we want him to be 100% employed, but if he is, we don't have any extra money. Because, and Brent, because of using the effective tax rate, and this is what's happened, and I'm not being critical. This is what's happened. Over the last 2 years, we have squeezed down the top, hoping that we don't hire everybody. And that difference in expenses is really not in the M&O expenses. It's in the hiring practices. And so you go to the clerks, county clerk, district clerk, the sheriff, the DA, those are big, DA's got big payrolls in the county, not big payrolls, but in the county. So every day he doesn't have an assistant district attorney, that's the float. Every day the county attorney has a vacancy, that's the float. We got 16 vacancies down in public works, and those are pretty good jobs. Every day we don't fill those, that's the float. So at the end of the year, when he says our expenses were 95%, if you'll look at that guy, ladies, gentlemen, the difference is in the salaries. Because these people are, and John, you're right, these people are really managing their budget. If they get 35 cents over, we know it, and we say, you spent too much money. And so that's on stuff. But the people, as long as we don't fill up all the people, that's our difference. So when you start thinking about this tomorrow, and then there's some great suggestions here, but when you start thinking about this, it's not that there's a fence battle of money somewhere. It's county clerk didn't fill her positions today, or the district clerk didn't fill her positions, or the DA's got 5 attorney vacancies that he can't fill, or whatever. That's bad, but it's good, because it gives us enough money to try to build our fund balance, and that's how you get to where we are. Now, other than that, you raise taxes, and you get an instant pop. If you go to 1 cent, that's 2.9 million or whatever else. So in our discussions, if we don't want to raise taxes, and you guys want to vote on that, I'm going to watch you next year and complain, because I'll be a citizen. But no, seriously. But the way you
Minute, Judge.
yeah, 3 months. The way you get there is how you handle, the float, number one, and how you handle the cost of government keep going up. And it's pretty obvious. We only got $400,000 out of the appraisal values this year, folks. That's nothing. That won't buy anything, hardly. So to build the fund balance, tomorrow you're going to have to really think hard. We are going to have to really think hard about what kind of shape we want the county to be in 2019. And that's all I'm going to say. Because I'm going to let you all take the lead, and we're going to run with this thing till we can't run if we can get 3 votes on something. But be careful, and remember that whatever we do to employees comes back to bite us one way or another. Whatever we do to cost of people comes back to bite us. Judge Shamsi cut 125 positions out of this county when he took over. We've probably gotten back 30 of those. The sheriff's department will tell you he's so understaffed in some areas that he still can't do his job. He'll tell us that anyway. But seriously, think about that, because these are great suggestions, but when you start doing some of these things, we have a morale problem. We have other things, and I am certainly in favor of giving our employees a raise. Maybe not 2.5%, but I'm certainly in favor of giving us a raise. And we've found a way to figure that out. And Commissioner Chesney's got some good suggestions on that. So everybody does. But at the end of the day, we've got to build that fund balance, because we can't leave this county. How many days can you operate with $13 million?
Month and a half.
Month and a half. Okay?
Quick, Dale, can you ask Juan between now and tomorrow about how much would be legitimate road District 4 public works money that could, so he can give us, so that number, everybody hopefully feels confident in that number coming from Juan, please?
Okay? You all ready? Good job. Now, I want to thank everybody. You've really handled this professionally. Thank you so much. Good suggestions. We'll take each one of these things, see what the difference in the add-on for the employee contribution for the health insurance of 1% is to an average employee.
We have that, actually.
It's very little.
I
It's
think
very
it went from $38 to $39, is that?
Around there, yes.
about $1. So if you give a 2% raise and you raise the health insurance 1%, that's about $1 a month.
The health insurance, it'd be $2 a month.
Well, okay, $24 a year. 2% is going to give them much more than $24. Shoot.
That's not a 1% to them, that's like 0.001% to them.
Right.
Well, we're increasing, you gotta remember, we're increasing a small value, so the current rate of $38 per employee right now it's around $38. And you multiply that by 1%, it's only $3 for a month. So $1.50 per paycheck, so it's not a month. But then when you take their annual salary, let's say $1,000 and multiply it by 2, that's $200 or $20 a year. So 20 minus 1 is still 19 on the positive side.
Okay, we'll have that number tomorrow.
Okay.
Okay? Very good, folks. Good job. Thank you all. I'll see you at 8:30.